Good evening, everyone, and I would like to welcome you all to CD1003.002 in our Housing Security Series, Avoiding Foreclosure, Budgeting, Foreclosure Prevention, and Loss Mitigation. We are hosting this class at the Department of City Planning, Neighborhood Planning Units with our wonderful NPU University. We have a couple of classroom rules. Well, first, I get a little bit off task because usually I just get straight to the point. But first, I would like to say my name is Samantha Terry. I am the program manager in the Department of City Planning, specifically in the NPU division, and I focus on education and training. My coworkers who are present and helping me tonight in our class, we have Tony McNeil. Tony?
Good evening, everyone. Tony McNeil, Department of City Planning, Community Outreach and Engagement.
Then we have Daniel Vasquez.
Hello, I am the Daniel Vasquez. I'm the NPU Resources and Support Manager.
Awesome. My assistant director, Leah, is not present tonight. She had a prior engagement, as well as our two other coworkers, Kip and Nicole, but we send greetings on their behalf. I'm glad you all could join us in this wonderful class. This is actually one of the new series that we introduced this year in our NPU University that I was really excited about because I'm really passionate about resources being made available especially when it comes to housing security in Atlanta. Again, this course, for those who are just joining us, is our Housing Security Series, Avoiding Foreclosure, Budgeting, Foreclosure Prevention, and Loss Mitigation, and is actually being taught by Atlanta Legal Aid. A couple of classroom rules. We ask that everyone please keep your microphones muted. We don't want to disturb the other learners throughout the process, and a lot of times background noise can come in and do that. We ask right now if you would like to grab a pen and a paper to keep notes, and feel free to grab a snack as well. This is only a 2-hour course, but want to make sure that you're engaged. So if you need to grab some food, go right for it. At the end of the class, to ask a question, raise your hand and to be placed in the queue. So with this particular class, there are going to be 2 presentations, and we're going to take questions at the end of each presentation. And we ask that you keep all questions brief and relevant to course content. A lot of times we can think of personal situations, but that usually kind of takes away from the time with the instructors. So if you have a personal question that you would like to ask, we will provide their information so that you can contact them directly, and everyone will also get a copy of the presentation at the end of the course when we send out the evaluation. If you're not sure how to raise your hand when we get to that component, at the bottom of your screen, if you click on reactions, a pop-up will come up and then it will say raise. You can click on the raise hand bar. Also, if they're saying something really cool that you think is really great, you can say thumbs up or a hand clap or whatnot. So to tell you about our instructors, we're being joined again by Atlanta Legal Aid. Ms. Nancy McLeod, she's a senior paralegal housing counselor at Atlanta Legal Aid Society, and Mrs. Karen Brown, who is the director and managing attorney at DeKalb Legal Aid. But I'm actually going to turn it over to them and allow them to give more background and information. You all ready? Is it Karen or Nancy? I don't know which one. Oh, Karen, okay.
Hey, I'm Karen Brown. I'm the director and managing attorney of the Home Defense Program of Atlanta Legal Aid. We're a specialized unit at Atlanta Legal Aid that handles mortgage and foreclosure related cases, and also home scam, home purchase scam, home sale scam type cases. So we're a unit of Atlanta Legal Aid, and I'm so glad to be here this evening. And I look forward to Nancy's presentation, my colleague, and any questions that y'all have at the end of each session.
And I'm Nancy McLeod. I'm a senior paralegal and housing counselor at Atlanta Legal Aid. I've been with Atlanta Legal Aid for 16 years. Previously, I worked with other nonprofit housing counseling agencies in DeKalb, Fulton, and Gwinnett. So I'm excited about being here and look forward to sharing some great information with y'all. So should I go ahead?
Yeah, go ahead, jump into it.
All right. Let's jump in. Okay. Okay. I want to tell you a little bit about what a housing counselor is and does. The profession's been around for about 40
Miss
years.
Nancy, the screen isn't up yet. I don't think your presentation is up.
Yeah, okay. It says I am screen sharing.
Yeah, but you are, but it's not the actual presentation. It's the I guess the screen before it's like the file.
You need to click on your PowerPoint and have PowerPoint come up. Okay.
Nope.
Yeah, your screen is showing your final files right now.
Oh, well, let's see. Well, what do I need to do here?
Everyone bear with us, give us a second.
Yes. All right, let me stop the share and go back to the PowerPoint slide. Am I sharing now?
Nothing is up just of yet.
Nothing's up yet. All right. All right. Oh. It's not sharing yet. Let's see. I got to escape from there. Okay. So that's when I started. Clicked on what from the beginning.
Okay. I'm not sure what.
Samantha,
Yes, I'm here.
you see anything yet?
Nothing as of yet.
Oh, interesting. All right.
Yeah, it's not sharing the screen at all right now.
Okay. Come out. All right.
Everyone, we're at the mercy of technology. We are
We
learning.
sure are. We sure are. Okay.
So if you want to grab a snack real quick.
How about that?
Okay. Yeah, all you have to do is go to change your view to full screen. Yeah.
Okay.
No. Go to the actual menu. Click on up to the top where it says view.
View.
It's right next to review between your, right there.
Okay.
And full screen, where is it? No, I'm sorry, not view. It's actually going to be up under, it's a present slideshow.
Slideshow. Okay.
From beginning.
Yeah. Okay.
Yep.
Here we go.
All right, we're good now.
Okay, good. So, a housing counselor is a professional that works with people who are trying to locate affordable housing or qualify for affordable housing. And then once they get into the housing, if they have problems, they'll often consult with a housing counselor to help them resolve those problems. So I think I mentioned that I worked in nonprofit housing counseling agencies before I came to Atlanta Legal Aid in DeKalb, Fulton, and Gwinnett. Housing counselors will often specialize in the kind of cases and clients that they work with. So there are numerous housing counseling agencies in Fulton County and DeKalb. Some of those counselors will work with homeless people. Some will work with renters. Some work with home buyers and some work with homeowners. I work with homeowners here at Atlanta Legal Aid. And what my job is here is to work with people who have fallen behind on their mortgage payments. So when they come in, my job is to help them resolve the financial issues that have caused them to get behind, and then help them to apply for programs that can bring their mortgage current so they don't lose their house to foreclosure. So what I've learned in 40 years of being a housing counselor, I hope I can share with you some of the ways, some of the steps you can take so that you don't fall behind on your mortgage, if that's possible. And if you do fall behind on your mortgage, what you can do about it. So the topic of this presentation is what you should do if you can't pay your mortgage payment. All right, so this is probably something you already know. When you get behind on your mortgage, or if you're a renter, if you're in this presentation, in this class and you're a renter, you get behind on your rent, you really start to panic. Before you get behind on that big expense, you've probably tried everything you can to avoid the situation. Like you stop paying other bills so you can pay your mortgage. You've run out of options. So before you call Aunt Sally and say, can I borrow $1,000? Before you pawn your wedding ring, before you go to the title pawn shop and pawn the title to your car, I want you to stop, because there's some steps you could take before you make that drastic decision to incur more debt, make your situation worse. So step number one, I want you to take a deep breath. As a matter of fact, take another deep breath. Let's really, really get calm, because we're going to have to think here. Okay. Find a quiet place to think. The question is, how do you survive this crisis? So the first thing you need to do is what you probably don't want to do. You put off doing this, but this is the first thing you need to do. Take out paper and pencil, or use the budget form that is attached to this presentation that you'll get later, and create a picture of your financial situation now. In most cases, you've lost some income. That's why it's so scary. You can't pay everything. What can you pay? Putting it on paper will help you to better evaluate what your options are. All right, the first thing you'll have to do is you're going to have to write down what your income is now, not what it used to be, but what it is now. So if you are a W-2 employee and you get pay stubs, simple thing, just pull out your pay stubs for the last 30 days. Add up what your take-home pay was and write it down. So I've given you an example of what somebody's paychecks may have looked like in September and the amount they may have received. What they're going to write down is the total for the month, the $1,700. So if you work for yourself, you're an independent contractor, or you consider yourself to be self-employed, the amount you're going to write down on this budget is your business receipts minus your business expenses, and that's your net business income for the last 30 days. And that's what you're going to write down as your self-employed income. So I've given you an example of someone who started a catering company recently. And in September, Catherine received in payment $560, $320, $260, So she received $1,140. She paid out $210 for supplies, $65 for advertising, $45 for gas for her car, for a total of $320. So the money she could use to pay her household expenses and bills is $820. It's $1,140 minus $320. That's what she would write down. So if you receive child support, that also goes down into your budget. The monthly amount you generally receive, the amount you get in child support can vary. I've seen that's a big part of the frustration for a mom who gets child support, is that the amount that they receive from the children's father varies. Put on your budget the monthly amount you generally receive. If you, your spouse, or a co-borrower, or any of your dependents receives benefits such as SSI, SSDI, Social Security Disability Income, Social Security Retirement, which is SSA, or a pension, write down that amount. Now, these are the people that budget with you and pay your household bills. They're the income that you're going to include on your budget. If your household includes family members who contribute to the household, either by paying some of the bills or buying groceries or providing cash money, then include the cash money you receive each month, but don't include the bills that they pay. So in your budget, if somebody in your household, like your grown son, works and he pays the telephone bill, then don't include the telephone bill in your budget that he pays. Don't include the groceries that he pays. Only include any cash money that he gives you each month. And if someone in your immediate family receives food stamp benefits and the food stamps are used to buy groceries for the house, then you could include the monthly amount of the food stamp benefits in your income calculations. So those aren't all the sources of income you could have. You could have rent from a boarder that you receive. But if you receive any sort of regular monthly income, write it down and add it up. And this is the monthly income that you have right now to pay your bills and your living expenses. Okay, step 3. We're going to talk now about expenses, but we're going to think about the expenses that are your top priorities. Those are the ones that you're going to write down first. So think about, what do you need in order to survive for the next 3 or 4 months, or until you think your financial crisis will be over? So this crisis may not take as long as you think, but at least plan for the next 3 or 4 months and then reevaluate. So what are those monthly bills and expenses? So the most common answers that people will give are their shelter costs. They want to stay in a home, they want to be warm, they want to be dry. So any payments for shelter, for utilities, for food, basic household supplies and personal care, transportation, communication. And if you need childcare so you can work, then those expenses are priorities. Prescription medicine, if you need to take regular medicine, healthcare expenses, if you're sick, that may be the reason your income has dropped. You're sick, you need doctor's care, and you need that medicine. Okay, so the priority bills that fit those categories are below. If you use the budget that I've attached to the form, to this presentation, These priority bills will be in bold, so it'll be easy for you to pick them out. But your shelter costs are going to be your mortgage payments. So you may have one mortgage, you may have two mortgages. The regular monthly payment for those mortgages needs to go on your budget. Your regular monthly utility bills payments will go on. Your regular electric, your gas, your water and sewer, the monthly cost, because if you live in Atlanta, you get that water and sewer bill every month. If you live in DeKalb, you get it every 2 months. You'll want a monthly amount. So what if you've already gotten behind on your utility bills just trying to make your mortgage payment? Make a note on the side of what you're behind. So you've got your regular electric bill. And if you're past due, your past due amount over here. Your regular gas bill, if you're past due, your past due amount over here. Food. What do you need to spend for groceries and food away from home? Because we all know that, you know, when we have extra money, we like to spend more. We like to eat out more. But what do you need? For the next 3 or 4 months, what do you need each month? Basic household supplies, personal care. Those are things like your laundry detergent, your paper towels, your toilet paper, your dish detergent, your personal care for your hair care and toiletries. So basic household supplies. You don't buy these things every single month. I'll give you a clue. Most of the time, in a household where there's just 1 or 2 people, that basic household supplies will be about $25 to $30 a month. So what you buy may vary, but it averages to about $25 to $30. So in your house, what do you think that average would be? Personal care is going to definitely vary for each household. So, but on an average, those products may last 4 or 5 months. So you've got to average it out what you might spend each month, not what you went and you stocked up yesterday. Don't put that amount down because that may last you 6 months. Your transportation, if you've got a car payment, that's critical. Put it down. Your car insurance, the gas for the car. If you take MARTA, what do you spend monthly on your MARTA bill? That will get you around, get you to your job or to look for a job or to the doctor's office. Transportation is critical. Communication, phones, you might have a cell phone, you might have a cell phone and a landline. What do you need? Do you really use the cell phone more than the landline? Then that would be more of a priority than the landline. Do you need internet to work from home, or is internet just something that's a pleasure for you and your family to have? So in your household, what's important? Monthly childcare expenses, if you need those so you can work. You may decide, well, I lost my job. My mom said she'd take care of my 2 kids. So monthly childcare expenses won't be a priority for me. Not right now. And then there's the prescription medicine, the monthly out-of-pocket costs you pay. Healthcare, if you are paying health insurance, your monthly out-of-pocket expenses for that. If you have a copay to see a doctor and you need to see the doctor, what is that? Write it down. And now you're going to add it up. Okay, you have your income, you have your priority expenses. With your current income, do you have enough to pay for those priority expenses? You do? Yes, that's great. You could survive the current crisis. You could pay your priority bills and expenses. If you have extra income, you can use it to either catch up past due amounts, or you can add back some expenses to your budget. Don't add back any expenses to your budget unless you have the income to pay them. Because what we're trying to do is we're trying to live within our current income. So what kind of expenses might I want to add back to my budget? Well, all right. You may want to add back your credit card payments if you have some. You may decide that's a priority. I need to add that back if I've got money to pay them. If you don't have money to pay them, don't worry about it right now. We can come back to that later. What about my cable bill? I really love my HBO. I need my Netflix. My daughter needs to go to ballet classes. So you've got to decide what else might be a priority for your family. If you're about to lose your electric service, a priority might be to catch up that electric bill so you don't lose your electric service. So think about it. But when you get finished adding anything back, make sure that you have enough income to pay for all those expenses. All right, so what if the answer is no? I don't have enough income to even pay those priority expenses we started out with. Okay, now you need to go back and look at those expenses. Is there anything you can eliminate or reduce in order to live within your current income? If there is, and the answer is yes, take it out, re-add it. Are you able to live within your current income now? Yes, great. So you're able to survive the crisis. You're able to pay your priority bills, maybe not all of them though, and it's going to be uncomfortable. So you also want to look at options to increase your income or help you pay some of those expenses. Take the pressure off of you. So step 5, investigate options to increase your income. So I've got some suggestions here, but what my goal is, these suggestions may or may not fit you, but I'm hoping it will inspire you to think about options you have to increase your income that you know of, that I don't know of, but they could be an important safety line for you right now. So the options that I've thought of, you can sign up for work through a temp agency if you're out of work. You can contact job placement agencies or attend job fairs where you may be able to find a job or a better paying job. You can talk with other household members about ways they can increase their income and their contributions to your household expenses. And if you're out of work completely, please apply for unemployment benefits if you might be eligible. That additional help will allow you to pay your bills. Step 6, investigate options to decrease your expenses. So if you're not getting food stamps and Medicaid, but you might be eligible, apply for them. You can apply online. I think it's gateway.com or gateway.gov. Easy. You can get an answer quickly. If your income is dropped to a certain level, you can get emergency food stamps. That cuts down on the amount of cash you need to buy food. Apply for programs that can assist you with irregular or past due utility bills if you haven't already. So the program called LIHEAP stands for Low Income Heating and Air Heating Assistance Program. Low Income Heating Assistance Program. In Fulton County, the Fulton County Community Action Agencies handle the LIHEAP applications. You would normally think of them as helping with the gas bill or the whatever your heating bill is in the wintertime, but sometimes they have money to help with your cooling bill in the summertime. Salvation Army can help with past due utility bills, and St. Vincent de Paul also has been a good source for helping with past due utility bills. if your car payment, if you don't have enough money to pay your car payment, before you get behind on it, call your finance company, ask for forbearance, meaning I've lost my income or my spouse has lost income and it's really a struggle now and I don't think I can make my car payment. Could I have a couple of months forbearance? And your car finance company may allow you to have a forbearance. They may not forbear the whole payment. You may have to pay the interest portion, but at the end of the forbearance, they may agree to put the amount you owe at the end of your loan, and that can help you. If you have an older car, talk with your insurance agent about dropping the collision coverage to reduce your premiums. I can't tell you how many clients that I've met with that have a 1985 car and it's paid for and they're still paying full coverage. And their car insurance premiums are they're exorbitant, $165 a month sometimes, and they really cannot afford that. By dropping the collision, you are saving money on your car insurance premiums, and you're not likely to get the value of that collision coverage if your car is totaled. If it's a 1985 car, it may only be worth $3,500. So talk to your insurance agent. You can also consider, do I want to increase the deductible on my insurance to reduce my premiums? If that will help you, it could be worth that conversation. Use coupons to reduce your grocery bill. That's probably one you've heard of from many, many people. Eliminate takeout and food away from home. You probably already thought of that. I may not have implemented it yet, but you probably thought about it. Investigate prescription discounts. So if you don't have health insurance and you're paying full coverage for your prescription medicine, check with your pharmacy. Oftentimes they have programs or companies and that can help you reduce the cost of your medicine. Okay. My mortgage payment is the problem, lady. All right, when are you going to talk about that? All right, here we are. Our mortgage payments are often 40 or 50% of our income when you roll in the taxes and the insurance. Sometimes you have two mortgage payments. And when you lose income, it is a crisis because you're often choosing between paying my mortgage and paying not just some of my priority bills, but maybe all of them. So what are you going to do? So I need you to remember this. If you have a mortgage, you have more time to resolve your financial problems before your house goes into foreclosure. You have more time. How much additional time depends on how far you are already behind and what type of mortgage you have. Okay, that takes a little pressure off, but wait, you have things you need to do right away if you want to be successful in saving your home from foreclosure. So as soon as you know you can't pay a mortgage, your mortgage payment, and you've done the budget, and you still can't pay your mortgage payment without falling behind on critical other expenses, make an appointment with a HUD-certified housing counselor or Atlanta Legal Aid's Home Defense Program to find out what options are available to help you catch up your mortgage payments. What? There are options that are available to help me catch up my mortgage payments? Yes, there are. There really are. And the sooner you know about them and the sooner you get ready to make an application for those programs, the sooner you could save your house. Some of those options will actually make your mortgage payment more affordable. So do this right away. Okay, what else can I do? Yes, I need you to do some other things. I want you to remove the mortgage payment from your budget. You already told me you can't pay it without getting behind on most of your other priority expenses. All right, take it out for right now. Add up your priority expenses again without the mortgage. Does your income cover your expenses without the mortgage payment? Yes. Okay. Focus on paying your priority expenses and trying to increase your income. But this is important. If you have money left over, save it for your mortgage payments. Why? I could use it for some other things. I really, really would like to get my HBO back on. No, save it for your mortgage payments. This will show your mortgage company that you're serious about wanting to keep your home. One of the most frustrating things for a mortgage company has got to be that somebody is 12 months behind on their mortgage. They haven't saved a dime. They had a hardship. They got behind. They got their hardship. They recovered from their hardship. They got another job. And they're not saving anything on their mortgage. They're still 12 months behind. And a mortgage company's got to scratch their head and saying, are you really serious about this? Do you really want to keep your home? Yeah, saved a dime. Save something. Well, your mortgage payment's $1,200. You have $400 you could save. It's not $1,200, but it's $400. Put it in the bank. The next month, put $400 more in the bank. The next month after that, put $400 more in the bank. It will pay off. All right, these steps should keep you afloat until your finances improve. When they do improve, use any additional money to catch up your mortgage and your car loan payments. Catch up your utility bills if that's what you still need to do. Establish an emergency savings account to cover unexpected expenses. So you already know if you lost a job because you were sick or because you were laid off, it could happen again. It's nice to have an emergency savings account. So I put a goal of $1,000 to $1,500. That's the goal. That amount will tide you over if you do have an emergency. But you set your own goal. But set a goal and put some money aside each month into that emergency savings account. My advice to you is that only after you've taken these steps should you add back into your budget some of the discretionary expenses that you cut out at the beginning of this exercise. When you do add them back to your budget, add them slowly to make sure you can afford the additional expense. Do you have a budget form I can use? Yes, yes. I have a budget form that you can receive when you get a copy of this presentation. And I'm also going to send you some instructions for using it. And I hope you will either use the budget form or write down on a piece of paper your own income and expenses and your own plan for surviving the crisis. So if you will put it on paper, whether on my form or on your paper, it will take the stress out of your head. It'll put it on the paper. You'll be surprised how much better you will feel because you're not carrying around all that worry. You have a plan, you're going to implement it, and you'll be a happier person, I think, as a result. Okay, so I hope that this information's been helpful. You probably have some questions because in 30 minutes, I can't cover everything. And if you do have questions, I'll be glad to answer them.
So do we have any questions right now for Ms. Nancy in regards to the first half of our presentation, which was on budgeting and preventive measures to avoid foreclosure? I also opened the chat if you wanted to type it and not necessarily wanted to speak it aloud. So if we don't have any questions, we're going to move right along. Ms. Nancy, you can stop sharing your screen, and thank you so much. Ms. Karen, are you ready?
Good evening. Oh, okay, so now I'm going to be the one who's technologically challenged on how to share my screen. So I am going to try this. Let's see. Screen share. Okay, I'm looking for
Your presentation. So it's probably giving you an option of a few windows to choose from.
yeah,
So choose on the one that has your actual presentation, the PowerPoint.
portion of the screen. Let's see.
Nope. All right, there we are.
All right. Is that working?
Yes, I think you zoomed in a little bit, but for the most part, it is on the screen. We are looking at your screen.
Let's see. What can I do different?
Let's just go with it and see what happens. Oh no, because it's I don't know how you zoomed in. Let me see. I would say right click on your presentation and
Okay, hang on.
Samantha, there's a few options up the tab at the top, and if you click on that, it says zoom ratio. You might be able to make
you
it
have to exit out of the, I think you're in the screen, the full screen view. You have to exit out of that. So press escape and stop sharing your screen.
All right.
Now it's the time for everyone to go get a snack though. So
Sorry about that, folks.
a
All right.
minute.
So go back to this.
Yeah, if you're under the actual PowerPoint presentation and you go to the full screen mode or the actual screening mode, you can click on the tab that says the view, as she was saying, and you can zoom out.
I'm not sure about that. Let's see.
Well, we can go for it. Everyone, you will receive a copy of the presentation at the end of the class anyway. It was just like one, like the little corner was cut off a little bit. Like it was just zoomed in just a little bit.
Let me try this.
Gotta love technology.
Oh,
Perfect.
so I'm going to go back to the.
No, it's perfect. Yep. Well, no, whatever you just did, it went back. It didn't, whatever you just pressed.
Yeah.
Undo that.
Okay.
Yes, leave it like that. That's perfect.
Do it like that? Okay. Okay. All right. Sorry, you guys. You know what? I'm a legal aid lawyer. I'm not an IT person. Thank you for your patience this evening. All right. So I want to talk. As I said earlier, my name is Karen Brown. I'm the managing attorney of the Home Defense Program of Atlanta Legal Aid. I want to tell you a little bit about the work that we do before I get into the substance of the presentation this evening on foreclosure prevention. In the Home Defense Program of Atlanta Legal Aid, we provide legal advice and referrals and legal representation to low and moderate income homeowners and home buyers in the metro Atlanta area. They may be at risk of losing their homes. They may be behind on their mortgages, facing foreclosure, or they may have already been foreclosed on and they're coming to us while they're facing eviction after a foreclosure sale. We really prefer to help people long before they're at the eviction stage or long before their foreclosure stage, But we talk with people at every stage. It's just, there are more options for helping people, when you've got plenty of time before the foreclosure sale has been scheduled. All right. And we help people who have been subjected to or targeted for predatory mortgage lending or servicing practices, folks who may be eligible for and wrongly denied mortgage assistance or loan modifications or other foreclosure prevention programs. And we help those who may have fallen prey to home purchase scams or home equity theft. And I believe that there was another class on these scam subjects earlier this year. Who are our clients? Our clients are folks who are living in the 5-county metro Atlanta area. I know that this session this evening is focusing on folks who live in the city of Atlanta, but we cover Fulton, DeKalb, Clayton, Gwinnett, and Cobb counties. Our clients tend to be longtime homeowners who may be elderly and or disabled. They're typically living on modest retirement or disability income, or they may be working homeowners who are experiencing layoffs or reduced hours or just low wages. All right, so what we're going to cover this evening is how to save your home. Of course, during COVID-19, we're still in COVID-19. We're still feeling the effects of COVID-19. We're going to cover what the foreclosure process in Georgia is. We're going to talk about federal law protections for homeowners. We're going to talk about different loan modification programs. We're going to talk about a mortgage assistance program that Georgia has called the Homeowner Assistance Fund. And we're going to talk about some practical tips for protecting the home. All right, so what's the foreclosure process in Georgia? The first thing we think about when we think about the Georgia foreclosure process is that it is non-judicial. And what that means is that the mortgage company or bank, they don't have to go to court to get permission from a judge in order to foreclose. In about half the states in the country, there is a judicial requirement. The mortgage company or bank has to file a lawsuit in court and get permission from a judge before they can foreclose. In the other half of the states in the country, including Georgia, there's this non-judicial process. They don't have to file a lawsuit. They don't have to get permission from a judge. Foreclosures in Georgia occur not on any day of the month, but only on the first Tuesday of each month. So guess what? Today, October 4th, is the first Tuesday of October. So today was foreclosure day. So there are a lot of people in Georgia and Metro Atlanta who were scheduled for foreclosure, and those foreclosure sales happen on the courthouse steps. There are notice requirements. So there's not a requirement that the mortgage company file a lawsuit, but there are some notice requirements. They have to send, and they usually send this through a law firm that the mortgage company hires. They send a letter. It has to be sent no less than 30 days prior to the scheduled foreclosure sale. So there's that, what we call a 30-day letter. It has to be sent via certified mail. Also, they are required to advertise the foreclosure sale in the local legal newspaper once a week, 4 weeks in a row prior to that scheduled foreclosure sale date. So the local legal newspaper in Fulton County is the Daily Report. So that's where the foreclosure ads are. So there are just those two notice requirements, a 30-day letter and a 4-week legal ad. Now, under Georgia law, Georgia law, which is not necessarily consumer or homeowner friendly, the requirement is just that the person be in default. So technically under Georgia law, if someone's in default, if they've missed a mortgage payment, the mortgage company can go ahead and start foreclosure. They can send that 30-day letter. They can start advertising, and that's very little time under Georgia law before the foreclosure sale happens. It's pretty rough. However, under federal law, this is a general rule. It applies to most mortgages, not all mortgages. But under federal law, there's a requirement that the mortgage company cannot initiate that foreclosure process until the person is 120 days behind on their mortgage, which means 4 months behind on the mortgage. So There are Georgia law requirements regarding the foreclosure process, and there's also federal law. Federal law provides some greater protections, but this is generally the process in Georgia. And when you think about that letter that is required to be sent out, and I will say this about Georgia law. Georgia law requires that the letter be sent. Georgia law does not require that the homeowner receive the letter. So this is pretty rough on folks, because if you think about it, this letter is supposed to be sent via certified mail. Well, the process for receiving something by certified mail is this. Well, it's sent, the postal service worker, brings some kind of slip of paper and puts it on the front door or puts it in the mailbox of the homeowner. The homeowner may see it. It might have been blown away in the wind. It might have gotten mixed up with some other papers. How does the person really know that they've gotten some certified mail? And then if they do get that slip of paper that says, oh, they've gotten some certified mail, they have to go pick it up at the post office. Well, maybe maybe they can't get to the post office, or maybe their work schedule is such that they can't get there, when the post office is open. So not everyone is going to receive that letter, but unfortunately, under Georgia law doesn't care if the person receives it. Georgia law just cares if that letter is sent. All right. So how does a homeowner know that they're facing foreclosure? Okay, so one way is if they've received the foreclosure letter, but as I pointed out, not everyone is going to receive that. Another way that they may know is that they're starting to receive tons of solicitation letters in the mail, flyers in the mailbox, maybe people who are knocking on the door or calling or sending email or text to the homeowner saying, hey, we can help you. We see that you're facing foreclosure. Then it's like, okay, well, they know I'm facing foreclosure, but that's another signal, is that all of a sudden the homeowner is getting inundated with these solicitations. Now, some entities that may be sending those solicitation letters might be bankruptcy lawyers who are advertising their services saying, hey, you're facing foreclosure, we can help you file bankruptcy. But also a lot of those solicitation letters are coming from investors or investor scammers or foreclosure rescuers who tout themselves as rescuers or saviors, will help stop the foreclosure sale. Those are all scams in my view. So that's another way that the homeowner may know that they're facing a foreclosure sale. Also, there's a website called georgiapublicnotice.com that pulls the legal advertisements from cooperating legal newspapers around the state of Georgia. And so you can check on that website to see if that particular person is if you or your family member or friend is scheduled for a foreclosure sale. And then you can also check in the local legal newspaper, when there are tons of foreclosure sales listed. And in Fulton County, in the daily report, there are tons of pages covering those. It's kind of hard to read, but that is another place that you can in theory check. And sometimes that information is online. And here's just a practical tip. We advise folks, and what we do when people are calling us for legal assistance, is we check in more than one place. Because if one of those places, it's georgiapublicnotice.com or the local legal newspaper, or, well, not the local legal newspaper, but another listing service that we subscribe to, if the foreclosure sale is not listed in one of those places, unfortunately, it doesn't mean that the foreclosure sale isn't scheduled. So we really encourage folks to look in more than one place to see if they're scheduled for foreclosure. All right, so I'm a lawyer, so we have to think, well, if someone comes to us and they're facing foreclosure, what are potential ways to stop a foreclosure sale? And we think about this when someone's scheduled for a foreclosure, or they come to us and they're not yet behind, but they're worried about being, about defaulting, or they're starting to default, and we know eventually they may be set for foreclosure. So what are some potential ways to stop a foreclosure sale? Well, here are 6 ways, and we lawyers that can think of more than that, but here are some basic ways, and some of these are obvious, but not all are financially feasible. So number 1, pay up the arrears. If you have the money to catch up the mortgage payments that are in default, and most people don't, but if if you inherit some money or win the lottery, or someone's been applying for Social Security disability benefits for years and they're finally approved and they finally get a check covering all of the back months of benefits that they should have been getting. Different things can, different possibilities may arise where someone might be able to catch up those arrears. Another possibility is to enter into some kind of workout plan with the mortgage company. And some examples of that are, a forbearance, a mortgage forbearance, and we're going to talk about a forbearance in a few slides, or a deferral of the arrears, or some kind of repayment plan, or a loan modification, or the Georgia Homeowner Assistance Fund. So that's another potential way to stop a foreclosure sale, enter into some kind of workout plan. Another theory or possibility in theory is a refinance. You think, well, how is that possible? If you're already behind on the mortgage, who's going to possibly refinance you? But one thing that we think about in particular for seniors, in not all circumstances, but in some, is that they might be eligible for what we call a reverse mortgage that could pay off the existing mortgage. And with a reverse mortgage, a senior who's age 62 or older and otherwise eligible does not have to pay a mortgage payment. They still have to pay their property taxes and homeowners insurance, but a refinance by a senior into a reverse mortgage is another possibility. All right, and then selling the home, of course, if someone could sell the home, what we call a full sale for full fair market value that can pay off that mortgage and not be foreclosed on, and they get all of the sale proceeds, all of the equity out of the home. So obviously not, the first choice for most people, but in theory, it's another thing that we think about. Also, as lawyers, we think about, what about filing a lawsuit and getting a temporary restraining order from a judge? Very difficult to do because there has to, in that particular situation, there has to be good, viable legal claims, and you have to be able to show to a judge that there's a likelihood of success on the merits of those legal claims and facts. So it's rare that we try to do that, but we have been able to do that in some cases. And so that's another idea that we think about as a way to potentially stop a foreclosure sale. And then another common option that folks think about is bankruptcy. Filing for bankruptcy is certainly a legal way to stop a foreclosure sale from going forward. All right, and here's a practical tip. If a homeowner is in a position where they are able to pay up the arrears on the mortgage, or they're able to get a loan modification, or if they're approved for the Georgia HAF program, the Georgia Homeowner Assistance Fund, or maybe, there have been communications with the mortgage company, and based on the situation, the mortgage company agrees to voluntarily stop that foreclosure sale. What we advise, here's the practical tip, is get written confirmation that that foreclosure sale has been canceled. Get that written confirmation from the law firm that's representing the mortgage company in the foreclosure process. Get written confirmation from them that that foreclosure sale has been canceled. And our advice is to do this because you don't want a situation where you think, hey, they told me I owe $7,500 to catch up the mortgage. I have the money to do that. I've paid them. And then you think the foreclosure sale has stopped, and you don't get written confirmation, and then they foreclose anyway. And then you go, well, why? Why did you foreclose? I paid all that money. And they say, well, actually, you didn't owe $7,500. You owe $7,525, and you didn't pay that extra money, so we foreclosed anyway. Obviously, terrible situation. So it's so important, if you are in a situation where you think they're stopping the foreclosure sale because of paying up their arrears, getting a loan mod, getting some kind of mortgage assistance, or some other scenario, get in writing that they have canceled that scheduled foreclosure sale. All right, let's talk about federal law protections. I mentioned these earlier. in the context of foreclosure sales and how there's this requirement that before the mortgage company can initiate foreclosure, in most cases and with most mortgages, they have to wait until the person is at least 120 days behind on the mortgage. All right, what about some other federal law protections? Well, you remember when the pandemic first hit in March of 2020, that Congress enacted what we call the CARES Act. So that was enacted, and that established some federal protections, not for all homeowners with all kinds of mortgages, but it protected homeowners who have what we call federally backed mortgages. What do I mean by federally backed mortgages? I'm talking about those who have an FHA mortgage or a VA mortgage, under the Veterans Administration, or a loan that's owned by Fannie Mae or Freddie Mac. So if the mortgage is in one of those categories, then the CARES Act provided certain protections. One of the protections was there was a moratorium on foreclosures. Congress said they cannot initiate or conduct foreclosure sales for federally backed mortgages until, under the law at that time, it said, you can start only after May 17th. So it only gave a couple of months. Of course, Congress didn't know then that the pandemic was going to continue. But of course, the crisis continued. And so what happened, Congress didn't extend that foreclosure moratorium, but the federal agencies that regulate these FHA, VA, Fannie Mae, and Freddie Mac mortgages, they promulgated rules that extended the foreclosure moratorium. And they extended it several times. But the last extension was through July 31 of 2021, over a year ago. So anyway, there were some federal protections, but the foreclosure moratorium, that ended. So there were deadlines when we passed those deadlines, but there were federal protections for that period of time. The CARES Act also established another protection for homeowners with these federally backed mortgages, and that is this idea of a forbearance. So they said if you have a federally backed mortgage, during the pandemic, then you can be approved for a forbearance. And I'm going to talk about forbearances in a bit, but it essentially allows the homeowner not to have to make a mortgage payment during the period of the forbearance. All right, so let's go to the next slide. And actually, I need to play this particular slide in order for you to see it. So let me go to that slide, and I'm sorry, and I'll go back to the other. I don't know if this is going to work. Oh, so how do you know if your mortgage is covered by the CARES Act, or how do you know if your mortgage is federally backed? So one thing we say is look at your mortgage statement. You can also call your mortgage company and ask. You may already know that it's FHA insured or VA insured, but here are things, if you don't know, that you can check. Check your mortgage statement, call your mortgage company and ask them. If it's an FHA loan, then there will be an FHA case number on your mortgage document, specifically on the security deed. And so here's a picture of the security deed. On the first page, there's a block with, it says FHA case number, and then you'll see an FHA case number. So if you have a security deed that has, an FHA case number, that is an FHA loan, which means it's federally insured and federally backed mortgage loan. All right. What else? What if it's not FHA or VA? If it's VA, it's going to say this loan is insured by the Veterans Administration. That kind of language is all over the mortgage documents. All right. So what if it's neither FHA or VA? So there are loan lookup websites that both Fannie Mae and Freddie Mac have. And here's the website for the Fannie Mae website, and you just fill in the first name, the last name, the street address, city, state, zip code. And then it also requires, this website also requires that you input the last 4 digits of the homeowner or the borrower's social security number, and then check a box that says, I confirm I'm the owner of this property or had the consent of the owner to look up this information. And then you click on the Get Results button, and what'll pop up is information showing that there's a match, that Fannie Mae does own this loan, or it'll say no match. And then the same thing, Freddie Mac has a similar website. So, and there's the link to get that information. And we're gonna, make sure that our PowerPoints get out to folks so that you can have these links. All right. Let me
go back to the view because it's doing that thing again. I think it's
Yep. Okay, so sorry about that. I hope that anyway, it was just easier for me to do it in the full view, but anyway, all right. So back to the other view. So I want to talk a little bit about what is a forbearance, because not everyone is familiar with that term, and it's a strange word. But anyway, as I mentioned before, it refers to there being a temporary pause in the mortgage payments, either no payment is required or reduced payment is required. But under the federal protections, they're not allowed to charge any late fees or penalties while the person is in a forbearance. However, interest is still accruing on the mortgage. And originally under the CARES Act, this idea of a forbearance was that someone could be in a forbearance up to a 1-year period. And typically it was originally granted in a 90-day period, and then you would have to apply to get an extension for another 90 days, up to 360 days. Now the federal agencies, the agencies that regulate or govern the FHA, VA, and Fannie Mae and Freddie Mac mortgages, they extended the forbearance periods up to a total of 18 months. Now, how much time a particular person in a particular situation can get was going to depend on the facts. But anyway, the maximum forbearance period was 18 months. All right, and there are also, deadlines to request that initial forbearance. And how does someone qualify? For those forbearances, for the federally backed mortgage loans, they had to just express, I have a hardship, and it, related to COVID, and it has to be either directly or indirectly related to COVID. A written application was not required to get that forbearance. So all you had to do was call the mortgage company and say, hey, I've been impacted by COVID. I have a COVID-related hardship. I'm requesting a forbearance. Now, we would advise people, get that forbearance in writing. And most mortgage companies would send some kind of letter confirming that. And if, we would also advise, if the person can make the payments, go ahead and make whatever payments you can, if you're able to make some payments, but keep good records of those. All right, next. So, the pandemic started, under federal law, the CARES Act protections, came into place during March of 2020. And those maximum forbearance periods of 18 months for a lot of people ended last fall. So for some people whose forbearance period started later, the forbearance periods may be ending like this summer or now this fall. But what happens when the forbearance periods end? So, unfortunately, some mortgage companies are saying, oh, well, now you've got to pay all of those payments that were owed. No, that's not what the law says. You should not be forced to be in a situation of paying all of those payments that were owed for the past 18 months. There are federal protections that say, no, there are other options. Now, what to do when that forbearance period is ending? Well, we advise folks, contact your mortgage company. And before that forbearance period is ending, talk with your mortgage company and talk with them about what are the options available post forbearance, after that forbearance period ends. There should be, for the federally backed mortgages, loan modification options without having to apply in writing for a loan modification. If the mortgage company is asking for something in writing and if it's federally backed, they shouldn't be. But again, it depends on the situation. So, but what are the general options for people when their forbearance period has ended? Well, one is to pay the missed payments in full, and maybe in some rare situations, someone might be able to do that, but they're not required to. Another option is if the person's financial situation, if they've recovered such that they're able to pay the regular mortgage payments going forward, then the general kind of option in that scenario is that the arrears that have accrued for the past 18 months, the payments that they haven't been able to pay, then those will be tacked on to the end of the mortgage. So that's deferred. Now, different kind of terminology that is used depending on what kind of mortgage the person has, what kind of federally backed mortgage the person has. But essentially, they just can then, if they're approved, pay the regular mortgage payments going forward, and then the arrears are tacked on to the end of the mortgage so that when the term ends, whenever that is, and it might be a year or 10 years or 20 years from now, then that amount is due and payable. Or another possibility, generally speaking, for federally backed mortgages, is that a loan modification will be offered. Sometimes there's a combination of deferring some of the payments to the end of the loan and a loan modification, but generally there's some kind of loan modification where the arrears are capitalized so that there's a new loan balance that's higher, the term is extended, and the person will get a new interest rate. One of the problems we're seeing is that with federally backed mortgages, the loan mod terms are defined. It doesn't vary from person to person. They're defined under the rules that apply to that particular type of mortgage loan. And they're very specific about what interest can be used. And it's the Freddie Mac primary mortgage market survey for 30-year fixed rate mortgages. Now, a year ago, that interest rate was 2.88% in September of a year ago. And so for people who got loan mods a year ago, their interest rate would be pretty low, and it would be lower typically than the interest rate they had. So under their loan modification, they're going to get a lot better term. Their new mortgage payment is going to be more affordable. The problem now is that the Freddie Mac primary mortgage market survey interest rate for 30-year fixed rate mortgages is a lot higher. It's like 6.7%. And so for a loan modification, maybe with the term being extended, even maybe that interest rate, maybe it's lower than what the person had in terms of the interest rate, but maybe it's similar, maybe it's an increase, but we hope, but it may be harder for a lot of people. We hope that the new payment will be more affordable, but this is just an issue to be thinking about for people who are now facing the end of their forbearance period and trying to get a loan mod. All right, so just a summary of the protections for mortgages during COVID-19. Again, what I've been talking about are the special protections for federally backed mortgages, those who have an FHA or a VA or Fannie Mae or Freddie Mac mortgage. There was that foreclosure moratorium, but that ended, July of 2021. There was the forbearance period that, was up to 18 months. And then there are these options for what happens after the forbearance ends: pay it in full, repay over time, defer the arrears to the end of the loan, or do some kind of loan modification. All right, and so what do we encourage folks to do is contact their mortgage company to well, in the early days, request a forbearance or an extension of the forbearance, or for some kind of post forbearance option. You can contact them by phone. Sometimes there's a place on the website that the mortgage company has, some kind of portal where you can apply or, request these kinds of things, or you can communicate with them by mail or fax. Now, I've been talking about federally backed mortgage loans. So let me shift to mortgages that are not federally backed, because not all mortgages are federally backed. There are mortgages that are not FHA, not VA, not Fannie Mae, or not Freddie Mac owned. So what about all those homeowners who have mortgages that are not in that category, that don't have those federal protections? So you have to talk with the mortgage company. And typically the mortgage company is going to have some kind of similar loss mitigation program. They may have a forbearance program. They may have, for when the forbearance period ends, repayment options, loan modification options. These are going to be governed not by federal law, but by, whatever internal guidelines that the owner of that mortgage has. So that's unfortunately beyond our control. But what we do say is encourage the homeowner to talk with their mortgage company about that and apply for whatever loss mitigation options are available. And then, there may be other options too, depending on the situation, such as a refinance. In some situations, a deed in lieu of foreclosure, or the option of selling the home. All right. What if, someone's in one of these scenarios and they're having problems? They have a federally backed mortgage, but it seems like they're not getting what they're supposed to be getting from the mortgage servicer. Well, you know what? You can file a complaint. You can file a complaint with a federal agency called the Consumer Financial Protection Bureau. And here's the website where you can look at how to file a complaint with that federal agency. If the loan is an FHA loan, you can call the HUD National Servicing Center, and here's the phone number for that. And then if it's none of the above, or what you can do in addition is to file some kind of appeal or escalate the matter with the mortgage servicer. We advise folks, if you're doing that, do it in writing. You should be getting letters from the mortgage servicer if they're turning you down for some kind of loss mitigation option. They should be sending you a letter that says, here are, we're turning you down, here's the reason. And if you want to appeal, here are your appeal deadlines. So we say, look at those letters carefully, because if you need to appeal, then you need to make sure that you appeal within the timeline they've given you. And as always, we encourage folks to keep good records. Also, under federal law, you can send certain letters that we call, and federal law calls, qualified written request. They can be requests for information and or some kind of notice of an error. And we say, consider sending one of these kind of letters to the mortgage servicer. There, in your letter, always make sure that you have your name and address and your mortgage loan account number, so that when they receive that letter, they know, what loan this applies to and who's reaching out to them and what home property address this concerns. But also, it's important under the law, you can't just send that letter to any address that the mortgage company has for that to require it to respond under federal law. The mortgage servicer has a special address that's designated to receive what we call qualified written request or request for information or notices of error. So make sure you look on your mortgage statement, usually on the reverse side of the mortgage statement. Sometimes it might be on the first page, or it might be on the website of that mortgage servicer. Look for the special address that they have for receiving these kinds of letters. And then, of course, keep a copy of your letter and proof that you've mailed it. All right. Again, I'm going back. I did this initially, but I just wanted to insert this slide again. Remember, there are a number of ways to potentially stop a foreclosure sale. They might not all be financially feasible, but they might. It's important to know them so that you know what options that the homeowner may have. Pay up the arrears, enter into some kind of workout plan, possibly a refinance. Selling the home is another possibility, especially in today's market when, property values are generally pretty high and if folks have a lot of equity. I know it's not the first option, but it's something to consider. Or if there are good, viable legal claims, filing a lawsuit and getting a temporary restraining order from a judge that stops the foreclosure sale from going forward, or filing for bankruptcy. All right, I have mentioned the Georgia Homeowner Assistance Fund earlier, and I want to give you some more information about that. So, I mentioned the CARES Act that was enacted by Congress in March of 2020. Congress also enacted in the spring of 2021 something called the American Rescue Plan Act. And as part of that federal legislation, Congress authorized what we call the Homeowner Assistance Fund. It's almost $10 billion in funding that went to Treasury. Treasury then has allocated or dispersed those funds to all of the states in the country and territories. And the amount allocated to Georgia, $354 million. All right, and that sounds like a lot of money. It is a lot of money, but it's really not enough to cover, to help all people in Georgia who have homes, who have mortgages, who've struggled and, are behind on their mortgages. But anyway, it's a large amount of money that's available in Georgia. The purpose, of course, of this program is to prevent homeowner mortgage delinquencies and defaults and foreclosures, and also to help people who are falling behind on their utilities. And, is specifically designed to prevent displacements of homeowners who are facing financial hardships after, and it doesn't say March of 2020, but January 21, 2020, obviously COVID related. The funds are targeted for low and moderate income homeowners based on area median income, and also to socially disadvantaged individuals. All right. In Georgia, so, Congress just, Treasury dispersed the funds or allocated funds to all of the states. In Georgia, the state department that is charged with administering the program is called the Georgia Department of Community Affairs. They administer the program for homeowners who've suffered a pandemic-related financial hardship. The kinds of programs they have are mortgage reinstatement, paying up the mortgage arrears so that homeowner can then, continue paying the mortgage going forward, or principal curtailment. That's a strange word for most people, but it is designed for people who have suffered some kind of permanent hardship, such as the death of a spouse or death of a homeowner, or disability, so that there's been a permanent reduction in income for that family. And it also provides assistance for housing related expenses. All right, what about the structure of the assistance? Does it require you to go to a lawyer's office and sign a bunch of papers? No, thankfully it doesn't. There is a grant agreement that is required to be signed. There's going to be no lien or security deed filed on the deed records, but the grant agreement shows the amount and kind of assistance that's being provided if the person is approved, and the person has to sign and return that. And then the funds go directly to the mortgage company, or as I mentioned, that the funds are available to help pay other kinds of housing related expenses, such as property taxes or property insurance, or homeowner association dues, or condo association dues, or utilities. So, but the funds don't go to the homeowner, they go to one of these providers, the mortgage company, the property tax office, the insurance company, or the HOA. The maximum amount of assistance, not everyone's going to get this, but the maximum amount of assistance that someone could potentially get under this program is $50,000. So that is helpful for those who need it. Where can you get more information, and where can you take the next step to looking at it and possibly applying online? Here's the website, georgiamortgageassistance.ga.gov. There is no requirement to pay anything to apply. You don't have to pay anyone to help you to apply. You know, you just have to, you can go online and apply. Sometimes if the person is not able to go online to apply, they can also call. You know, I've actually heard of people who actually go to the office and apply in person. So I'm sure that's not something that they prefer. They prefer folks to apply online, but there are other ways for people to apply if they cannot apply online. All right. So that's really the end of my presentation. Again, where can you get free legal advice? For seniors who are age 60 and older, we have what we call the Georgia Senior Legal Hotline, and here's the phone number, 404-657-9915. And then for Atlanta, and that's actually a part of Atlanta Legal Aid. The Georgia Senior Legal Hotline is for folks across the state who are age 60 and older. So we do have lawyers who can help you know, advise people in those situations. But for the metro Atlanta area, for folks in the city of Atlanta, we have, you know, the Atlanta Legal Aid Home Defense Program. And here's our phone number for folks who are calling our special program for assistance, 770-817-7538. We also have a website, atlantalegalaid.org, O-R-G. And folks can also apply for legal assistance and advice online. And as I said, we're going to be giving out our materials so that you can have access to these phone numbers and websites. And again, it's just additional information about finding out more information about getting help from Atlanta Legal Aid. Or as Nancy mentioned, there are HUD-certified housing counselors. I mean, she's a HUD-certified housing counselor. We have a couple of other HUD-certified housing counselors on staff at Atlanta Legal Aid. But you can also find HUD-certified housing counselors at other nonprofit agencies. And here is the website for finding HUD-certified, free HUD-certified housing counselors at hud.gov/find-a-counselor. And also, if anyone has been targeted for some kind of scam and you want to report that scam, you can report it to the Federal Trade Commission at ftc.gov. All right, so that's the end of my presentation, and I'm available for questions. And should I stop my screen share?
Yes, ma'am.
All right.
We do have we have a couple of questions in the chat. The first is from Ms. Carolyn Howard. Even if you experience a hardship from a death, do you have to be below income level?
Does this question concern the Homeowners Assistance Fund?
Yes.
Okay. The income, yes, has to be below their income guidelines, but I think the income guidelines are pretty high. So let me just pull up on my, let's see. If you go to the georgiamortgageassistance.ga.gov website and go to frequently asked questions, there's a place, you know, what are the income requirements? And the household income at the time of the hardship or the time of the application has to be reviewed. They look at the area median income, and the requirement is that it be below, it says 100% or less of that for all applicants, but for those who are considered socially disadvantaged individuals, that amount is 150%. So someone who's socially disadvantaged under the guidelines of the program, they can have a higher income. And now, who is deemed socially disadvantaged under the Treasury rules? And I'm just going to read from that definition. It's those who've been subjected to racial or ethnic prejudice or cultural bias because of their identity as a member of a group without regard to their individual qualities. And the social disadvantage must stem from circumstances beyond their control. There is a rebuttable presumption that the following individuals are socially disadvantaged And that includes Black Americans, Hispanic Americans, Native Americans, Asian Americans, and Pacific Islanders. All right.
The next question we have is from Brian Sumlin. My example from the GDHS earlier this year, when I applied for the assistance, I was still in forbearance. They say on my application, and by the time they got to it, I was denied. How could you tackle that type of scenario?
Okay, I'm not sure what GDHS is, but when I apply for assistance, and are you,
Can you explain the situation a little bit better?
and the assistance that you're talking about, are you talking about the homeowner assistance fund, or are you talking about a loan modification?
It was through the, I guess, the Georgia Department of Human Services. Back in January, they had another round of mortgage assistance. And at the time, I was in forbearance, and I submitted my application and all that stuff. So it took them about 2 to 3 months. And then by the time they picked it up and looked at it, yeah, I was out of forbearance. But during the time I submitted it, I was in forbearance. And so the caseworker called me back and said that, okay, well, unfortunately, you're not eligible because we just picked up your application in April. It was late March that they finally looked at the application. So they got backed up.
Okay, so let me see if I can.
So a case like that, how could, what's a, you know, when I was actually in forbearance and I had to get the mortgage company to, they say, yeah, he was in forbearance in January, he was in forbearance in January, February, and at the end of March. So why was his application why was it disapproved?
Yeah. So one thing that I would want to look at, and if someone came to me with that kind of scenario, is that first of all, I hope that they would come to me like right after that happened, and then I want to see what does the letter or email say that, and it's the Georgia Department of Community Affairs send. What does it say is the reason? So I always want to look as a lawyer, like they may say one thing, but I want to see what they say in writing. And I'm just going to guess about this scenario. So I'm thinking you're probably behind, and let me say this too. It is really frustrating for this program officially publicly launched in January. And to hear you say that you applied in January and you didn't hear back until March, that's troubling.
Yeah,
and-
correct. Because it's not just me, it was a lot, it was a few people there.
This happened to a lot of people. And we've had people come to us who applied in January and they didn't hear until May, or they didn't hear back until June or July. That's very frustrating, and it's very troubling that the department is taking so long to respond to people's applications. Now, I also understand that, I don't know how staffed up they were for this or are, but I know that they've received a ton of applications. Well, they've received a ton of applications because there are a ton of folks in Georgia who have been struggling, who are behind on their mortgages. So, so I'm sure that is very frustrating. Now, so I'm just going to guess about the scenario that maybe you are behind, and I'm just going to guess that maybe after, you applied, and then in between the time you applied and when you heard back from them, maybe you were approved for a loan modification so that the mortgage company then either deferred your arrears to the end of the loan or did a loan modification so that you were no longer technically behind on the mortgage. Was that the scenario? Because I've heard this from some people as well. And then the department,
like that, the caseworker had called and he said that, by the time we checked, you were current. You current.
So that's another frustrating thing So what they're going to say is, well, you're no longer behind, so you no longer need the help. But you know what? That would have really have helped the situation, and and possibly the mortgage assistance would have been better financially than the loan modification you got. So I don't, that's unfortunate. I don't know what to say about that, but we've definitely had other people come to us with those kinds of problems, and I don't know a way around that. But what we would do if that person came to us, I mean, we would look at what their situation is now, and if did they get the right kind of loan modification or deferral or whatever kind of program they got with their mortgage company? Is that mortgage now affordable? And if it is, then great. But if it's not, is there anything else they could potentially get? And could the homeowner assistance fund help with that? That's something that we might consider. And Nancy, I don't know if you have other ideas about that.
Well, I hope that helped.
You explained it perfectly, Karen.
So, but the other thing I would say about that is that if the department has turned someone's application down, they should give a reason, and that reason is important. And then they should also give them the right to appeal within 30 days. So, whoever is in that situation, they can certainly contact us, apply for legal help, and we can look at it and see if there is a good basis to appeal, to see if they should be getting the assistance.
Do we have any more questions? Don't be bashful, y'all. Okay, well, if we don't have any more questions, Brian?
I have two.
Well, Ms. Carolyn, hold on one second.
Okay.
I did see someone come up. I'm gonna get back to you.
She can go for whoever.
Wait, I'm sorry. Taryn? Go right
Yeah,
ahead.
good evening. I just want to confirm that for government-backed loans, the assistance that was in place during COVID, there's nothing similar to that now that exists, correct?
Okay, so
In terms of during COVID, government-backed loans, these homes couldn't, the foreclosure process, I guess, was paused.
yeah, the foreclosure moratorium ended in July of 2021, but forbearances are still technically available. And these post-forbearance loan modification programs that I've mentioned, if the person are still available, if the person has an FHA, VA, Fannie Mae, or Freddie Mac backed loan. So those programs are all still available. They haven't ended.
Okay, and my next question is for conventional loans. Is there any type of protection or forbearance for, not protection, but forbearance for conventional loans?
So if it's not federally backed, then what kind of loss mitigation options might be available, whether it's a forbearance or a loan modification? That's going to be up to the mortgage, the entity that owns the mortgage. And so that's why we encourage folks to talk with their mortgage company about any of those kind of options. So yeah, we have folks coming to us in those situations where the loan is not federally backed, and we have to talk with the mortgage company. And the mortgage company should be sending some kind of letter to the person, letting them know generally what kind of options are available, and inviting that person to apply in writing for the various kinds of loan modification programs. And then the mortgage company should then review and evaluate that person for the various options, and then let them know if they've been approved or not. But yeah, for people who don't have a federally backed mortgage loan, there's not one specific or a specific program that they're entitled to. It's really depends on that mortgage company.
Okay, thank you very much.
You're welcome.
I'm going to go to Ms. Carolyn Howard, and then I'm gonna come back to you, Brian.
Okay, yeah, I had two questions. I just wanted to clarify when I asked you about the income, when it says 100% under the medium income. Can you give an example? Like if the area medium income is $50,000, what would be 100% or 150% under it? What would I have to make to meet that if the area income is just $50,000, just to make it simple?
Okay, good question. Let me see if I can find the area median income is not just one number. They're going to look at the number in the household, but let me see if I can find that.
Okay, and while you looking it up, I'll ask my next question. So on that program where you lost a spouse during COVID, and I could just say me, I experienced a hardship for the fact that I lost two incomes in the house,
Mhm.
but I do work and make an income. So is it so okay, so you still have to, have been behind on your mortgage to get that program too?
You're asking some good questions here. I don't necessarily have all the answers. But let me pull up the Georgia Half website regarding the different kinds of hardships. Hang on for a minute. So there's that principal curtailment program. It talks about being available where there's a permanent loss of income, which seems to be the case when there's the death of a spouse or one of the homeowners, caused by COVID, such as full disability or death of a spouse, to reduce, and then that could be used to reduce the mortgage balance. So I don't think that necessarily requires that the person currently be behind on the mortgage, but they may, and they don't have all of the rules on their website. They may require some kind of like imminent risk of default. But if in your situation, they probably require, some kind of information indicating that the person, can't afford the mortgage under the new income after that, the loss of that income. So, anyway, but I would encourage, if you're in that situation, go ahead and apply for the HALF program. And then if there's any problems in being approved, definitely reach out to us.
Okay, and like I said, could you explain that? Because I did read that 100, when they say 100% of the median income, I never understand what exactly that means. So, like I say, if you could just make a figure up, just
Okay. I'm
okay.
just pulling up some information that I have from DeKalb. The Atlanta area median family income is, I think this is for 2022. I'm not positive, but it's $96,400. I mean, a lot of people don't have that kind of income. So, let's see. And then actually the chart I'm looking at is not showing. So anyway, so that's the Atlanta area median income is the information I have for that. 96,000.
Okay. So if we say 100,000 hours and it says you have to make 100 to 150% under that, so what would that be?
Well, if your income is below that, then you should be eligible. Whatever.
Oh, okay.
And then it may depend on the number in the household. So, so anyway, I don't want to answer questions about like what income someone has to have or less than whatever amount. You just need to, submit the information about whatever your income is. And I think that they're going to look at when the hardship hit, they're going to look at the difference, when you had the hardship and or now when you're applying. So,
okay.
Brian,
and they're going to look at, they also want to look at, part of the documentation that's required is, showing that you had better income before, and then after the hardship, you had less income. So they're going to look at, the fact that you've been impacted and that there's been a drop in income. So you just have to have documentation showing that. And then if your income is below whatever that, magic number is, depending on the number of the household, that it's below that amount. I think at either time, now when you're applying or at the time of the hardship.
Okay. Thank you.
You're welcome.
Brian, you can go ahead and unmute yourself.
Yes, I had two questions. I like these classes because I've learned a lot this year as a legacy resident in the city of Atlanta in the Beltline neighborhood uh, about the legacy retention program that started this year and stuff. Maybe at the next class, could we like invite like the Georgia Department of Community Services and like them and the other firms on here to explain people how these benefits are going to work. Uh, but my question is for the next class, can we invite them because that story, like my story, and I'm giving that testimony because you know I was really hoping for it since this is not about me, but it's a lot of people were in this type of situation, and it even reached the news. It was some stories like this on the news, and so and they were hard to get in touch with, even if you're doing your due diligence to appeal, like the ladies were saying. How can we invite them to the next class? And if people need help, you know what I'm saying, they need to give their information, we can contact them. Because that was very important. Thank
Okay,
you.
well, Brian, actually, so what we do value with NPU University is feedback such as yours. So in the evaluation, if you can actually complete one of the evaluations and type out the group that you're referring to, who you would like us to have partner with to teach a course on. I know you mentioned them a couple of times, but you just put it in writing, and that way we can look and see who the contact people are. And Miss Karen or Miss Nancy, you are aware with the organization as well. And I can reach out for our next year as we put together our housing series. I can incorporate this organization, especially if it's a need or a want within a community.
Okay, great. And I will say this, that it's the Georgia Department of Community Affairs. And actually I heard on WABE, I think it was last week, Rose
Yes,
Scott
thank you. That's what it was. I'm typing it in now.
interviewed the deputy commissioner, I think her name is Tanya Curry, if I'm not mistaken, about the Georgia HAF program, about the Georgia Homeowner Assistance Fund program. It wasn't a long interview, that there wasn't a lot of detail about it, but I think that's a great idea to for them to hear from the community. I mean, to hear from them about the specifics of the program, and also for them to hear from the community about the problems folks have had applying and being approved.
Do we have any more questions? I don't see any hands raised. Okay. Awesome. Well, I would first like to thank Ms. Nancy, Ms. Karen. Thank you so much for participating today. Again, I love working with your organization because I believe that you all have a lot of resources that a lot of communities are just not aware of. So any way that I can advocate and put this information out, I am going to, and I'm going to push for it. As for our next upcoming classes, as Mr. Brian mentioned, we do have upcoming courses that are for the remainder of the month. We have CL 1003.003. That's Parliamentary Procedures 3, Membership Has Its Privileges. And that's next Thursday, October 13th from 6 to 9 p.m. And the following course is actually one of our in-person courses, which we have not had in a while, as you all may know. So this will be our first mobile workshop. And it's actually going to coincide with our Historic Preservation Week in partnership with our department, Historic Preservation. Is Thursday, October 20th from 10 a.m. to 12 p.m. and it's limited slots. And they're actually going to provide a tour of some parks in Atlanta and give some historical feedback and background on those parks. So we only have a few slots for that course. And if you are interested, make sure you register when the link opens. Remember, it's only limited slots. And if you want any more information about any more courses that we are offering, you can visit www.npuatlanta.org. You can also follow us on social media on Instagram, Twitter, and Facebook at NPU Atlanta, and on the next doors at City of Atlanta Neighborhood Planning Units. If we do not have any more questions, concerns, or comments, everyone was going to receive an email with the evaluation. I encourage you all, please, please, please complete the evaluation. If you have any recommendations for courses like Mr. Bryan did, that would be the time to make those recommendations, or just anything. We just want to ensure that this program continues to grow and get better, and we need information from you all to do so. With that being said, everyone, please have an awesome, awesome good night. And thank you again for joining us on this Tuesday. Be blessed, everyone.
Thank you so much for having us. We really appreciate it.
Thank you.
Okay, good night.